Hi everybody, glad to be here today. My name's Aaron, I'm the Managing Director of Pursuit Minerals. Changing the flavour, we're going to be talking about lithium, which is really exciting, especially in this... Is that on? Can everyone hear me? Oh, there we go, good. Being unique, we're going to talk about lithium. 3 reasons why we are a prospective 20 bagger, and in no particular order. First out, the standout is our pathway to production and resource appraisal. Pursuit Minerals, was an existing shell which acquired our lithium asset in March this year, so we've only technically been around for about 6-7 months. I keep moving the microphone away, sorry, so if anyone can't hear me. So we've only been around for about 6-7 months at the moment. Our flagship asset is the Rio Grande Sur Project, which is on the Rio Grande Salar in the Salta Province of Argentina. We're not an explorer. This project was picked and sourced through sitting on an existing NI 43-101 resource of 2.1 million tonnes. Salars and the brines in Argentina are a dynamic resource. Dynamic resources don't understand that there is a tenement boundary on the top of the salar. So for us, we were able to look at the existing geophysics, existing drill holes, and we had a fair idea of certainty that we had lithium and have lithium beneath the surface. On top of that, we've paired that with a lithium carbonate pilot plant, which has a run rate of 100 tonnes. Pursuit completed the acquisition of the plant earlier in the year. The plant in itself is in its commissioning stage. We've just finished our block flow circuit with Worley, the engineering firm, who have mapped out our mass balances for production of 100 tonnes per annum of battery-grade lithium carbonate. So, in comparative in the lithium market, you're getting a lot of people exploring for lithium. We actually have the lithium that sits below us, and we're currently appraising our resource where we're looking to announce our first maiden JORC and starting our drilling campaign. So Pursuit in itself is we're not so much an explorer, more of a producer, right at the entry curve. For us, with that pathway to production heavily outlined, also our exploration targets, which were culminated in some recent geophysics works, which showed our resource extending quite significantly to 500, 600 meters in depth. All of the historical drilling on the Salar, which was part of that NI 43-101 resource, that was only drilled to about 100 meters. So for us, we're looking at our resource open to depth and also in terms of production. Just talking about the lithium market, we're seeing a lot of consolidation and M&A occurring. I'm hopeful there might have been a few shareholders here in LPI, which was taken out yesterday by Codeco. There's also been a bit of consolidation in Argentina more recently with Alpha Lithium being purchased by Tech Petrol. Pursuit is right at the start of our journey. We're a smaller market cap. We've only been around for about 6-7 months, comparative to LPI, we listed in 2016 and then being taken out after about a 7-year journey. So for us, the lithium trends are really positive in terms of the the demand growth, but the supply side response is a bit hit and miss. If you go back in time and have a look at some of the Roskill reports, the very famed lithium industry reports, there's always a graph about new supply coming into the market. I don't think it's ever been accurate in any of the years it's been published since about 2006. Lithium is a very dynamic, changing industry, and it's actually very technically complicated. It's more chemical engineering than mining in itself, and for that, bringing on projects for new supply is actually considerably more difficult than many people expect. However, we're seeing an explosion in demand that when I started my career in 2008 in lithium, the biggest end use was glass and ceramics, and the golden unicorn was to actually get the offtake contract with 3M for post-it notes, as there's lithium in the glue in the back of post-it notes. So you compare that for a fast forward to 10 years, there's a real change in dynamic where last year there was 10 million electric cars sold, a massive emphasis and drive and push towards lithium adoption in vehicles, but also in terms of where is that supply actually going to come from. So for us, we're seeing a very big opportunity here for a mass consolidation in the sector. When you take that into consideration of Argentina, where we operate specifically, there's 17 salars in Argentina, no more, no less. Of those salars, which is the salt lakes which host these resources, there has already been about 6 that are consolidated. Some more famous than others, such as Rincon, which was purchased by Rio Tinto for just under $1 billion last year, and another one, Pozuelos, which was purchased by Ganfeng, also for just under $1 billion last year as well. So the supply-demand theory will come into this, where actually being able to find a lithium resource in the Lithium Triangle will become almost impossible within the next 2 to 3 years, where consolidation is happening. The Lithium Triangle, home to 50% of the world's lithium resources, and actually quite a bit of production. There's also question marks hanging over Chile at the moment with its nationalization response. Is this going to be the 70s all over again, where nationalization of the copper companies was announced as a state partnership in 74, and by 78 the Chilean government did a flip and said, nope, we're going to take the whole thing. So we kind of might have seen some overtones for that in the LPI acquisition. So for our perspective, going back to those 3 points, Pursuit is very well positioned to take advantage of the lithium market where it's going. A lot of people focus on spot pricing. However, that's a massive misconception. The spot market accounts for about 5 to 10% of the lithium market. Majority of contracts, such as Albemarle, 80% of it is all long-term contracts with pricing. Nearly fixed pricing. So from that perspective, we're really looking forward where a mass demand is coming on, and the supply side response has a lot of questions. For example, Liontown Resources, subject of a takeover bid, now with a massive capex bill to bring that into production. Comparatively, brine projects are historically much cheaper. The capex bill generally in that 300 to 500 million US range, and a lot of the new supply has been through companies like Alchem, formerly Orocobre, which bought their deposit at Olaroz into production in Argentina from when they listed in 2008. More recently, getting into production 2012, 2013, 2015 onward. So from that perspective, Pursuit well positioned in the lithium market, a lithium market that's growing with demand increasing year on year. A lot of questions over supply, but really sticking to our fundamentals, where we're not explorers, we're developers. We know that we have lithium within our salar, and on top of that we have a process and a plant to produce lithium carbonate. We're not producing a lithium oxide that's a 6% oxide or a lithium chloride. It's the battery carbonate that's used in the lithium iron phosphorus batteries. So for us, we're looking at first production from our pilot plants within the Q1 of next year, where we'll be producing enough samples for potential offtake partners, as we then look to expand that plant up to site, up at the salar. So yeah, thanks for listening. That's Pursuit Minerals, and hope you all have a good afternoon.
Thank you, Aaron. So does anyone have a question for Aaron? If not, I've got one. I guess, doing mining IR, I cut my teeth on hard rock lithium initially for a company called Leo Lithium, and then I've also worked with a brine lithium sort of developer. Which do you think is going to be the preferred source, if there is going to be one? Do you think out of hard rock and brine, where do you see people really focusing in the future?
For me personally, I think that brine will come out on top. Just if you go back to the history of lithium, FMC, when they started their operation in the 80s, they actually moved from hard rock to brine into Argentina, and that's now Livent, which is merging with Alchem, Orocobre. Personally, I just think that brine, it's kind of like iron ore. It's that race to the lowest capex, lowest opex, of which brine historically has always been. Hard rock will have its place, absolutely. The converters in China are not going away anytime soon. There are a massive supply of the lithium carbonate. Deposits like Greenbushes are very hard to find, as shown, and there are unicorns out there. But I think if we look at the overall demand and the overall supply response, a lot of that will come from the Chilean and Argentinian brines in the future, just as they're heading towards the lowest cost curve and the lowest OPEX and CAPEX in the quartiles.
Thank you. Anybody else want to pose a question? Or Des? Yeah, I'll bring it to you.
Thanks, Aaron. I haven't heard of your company before, and I'm just a private investor. Tell me about you're looking at getting some initial production Q1 2024, and I'm just wondering how much money do you need to get there, and how much money have you got in the bank? Thanks.
Thanks. So for us, it's the operating costs. So we're talking the several hundred thousands of dollars. We already own the plant, which was very fortunate in the way that we were able to source that with our contacts in Argentina. So that plant's been commissioned at the moment. It's all of the pieces in play. And we've got about $4 million of cash in the bank that sees us through from our main exploration program, which is our drilling, our diamond drill program, and our pumping well, as well as our first initial our first initial production. The first initial production is quite low. You're talking thousands of kilograms. The plant itself can actually produce 100 tons per annum on a continuous basis. But for us, pilot plants were never intended to be economically viable. This is more of the proof of the concept before we move the plant up to the Puna, up to the Salar, creating a small-scale continuous production.